In the high-stakes world of global trade, China is making a bold move, a proposed $50 billion mega canal. This isn't just an engineering feat, it's a strategic gambit to reshape global shipping and reduce reliance on existing choke points. The canal would rival the Panama Canal, offering a direct route for the world's largest cargo ships between Asia and the Americas. For China, controlling such a route is about securing its economic future and expanding its influence, especially in Latin America. The project is a centerpiece of the Belt and Road Initiative, aiming to create a new, Sino-centric trading system. Beyond the canal itself, China plans to develop surrounding ports and industrial zones, drawing in regional partners and challenging U.S. dominance. This isn't just about moving ships, it's about shifting economic and political power, signaling a new era of great power competition. The construction of this canal could fundamentally alter the balance of influence between Washington and Beijing. For over a century, the Panama Canal has been the linchpin of maritime trade in the Americas, connecting the Atlantic and Pacific and fueling global commerce. Once a symbol of U.S. power, its transfer to Panama in 1999 marked a new era of sovereignty and economic growth for the country. Today, the canal remains vital, but faces new challenges: larger ships, climate change, and severe droughts that have forced restrictions and delays. These disruptions have exposed the canal's vulnerability, prompting shippers and nations to seek alternatives. The 2016 expansion allowed bigger vessels, but water shortages now threaten its reliability. As delays mount and costs rise, the search for new routes intensifies, opening the door for China's mega canal and Mexico's rail corridor. The Panama Canal's dominance is no longer assured, its legacy is being tested by climate and competition. The once unquestioned king of transoceanic shortcuts now faces a new era of rivalry. The Panama Canal and China's proposed canal represent two competing visions for global trade. Panama's canal, managed as a neutral utility, has long served all nations. China's project, however, is a strategic tool to advance its own interests and those of its allies. A Chinese-built canal could outmatch Panama's in size and efficiency, offering integrated logistics and potentially undercutting Panama's revenue. This rivalry isn't just economic, it's deeply political, with the U.S. viewing China's ambitions as a direct challenge in its own hemisphere. The presence of a Chinese-controlled canal would shift the regional balance of power, intensifying the U.S.-China rivalry. Unlike Panama's neutral stance, a Chinese canal could be used as leverage in times of tension, fragmenting global trade. The world now faces the prospect of trade routes becoming tools of statecraft, not just commerce. The U.S.-China rivalry is playing out in Panama's ports, the gateways to the canal. The ports of Balboa and Cristobal, operated by a Hong Kong-based company, have become flashpoints for U.S. concern. President Trump has vowed to curb Chinese influence, pressuring Panama to scrutinize its port contracts. In response, Panama's government launched an audit and legal challenge to the port operator's contract, citing unfair terms and low royalties. Meanwhile, a $23 billion sale of these ports has drawn interest from U.S., Swiss, and French companies, until China threatened to block the deal unless a Chinese state-owned firm was included. This is more than a business dispute, it's a geopolitical chess match with both superpowers vying for control at the canal's entrances. Panamanian President Mulino is caught in the middle, balancing U.S. demands with the need to maintain ties to China. In a nod to Washington, Panama declined to renew its Belt and Road Agreement, but stopped short of cutting diplomatic ties. China accused the U.S. of a Cold War mentality, while Panama struggles to assert its sovereignty amid escalating tension. The fate of these ports will shape the region's strategic landscape for years to come. Panama's challenge: protect its interests without becoming a pawn in a global power struggle. The spotlight on the Panama Canal has spurred new trade routes across Latin America. Mexico's interoceanic corridor, a $7.5 billion rail line, offers a land-based shortcut between the Pacific and Atlantic, bypassing canal bottlenecks and drought risks. With new industrial parks and successful early shipments, Mexico is positioning itself as a key logistics hub and a direct competitor to Panama. In Peru, the Chancay Megaport, a joint venture with China's Costco, will connect South America directly to Asia, slashing shipping times and costs. These projects show China's multi-pronged strategy. While the mega canal is a long-term vision, investments in ports like Chancay deliver immediate benefits. For Latin American nations, these new corridors mean more options and leverage in global trade. The future isn't just canal versus canal, It's a complex web of competing and complementary routes, each backed by rival powers. The region's trade landscape is being redrawn before our eyes. US-China competition is forcing Latin American nations to navigate a tricky diplomatic landscape, with loyalties and alliances in flux. Some, like Argentina under President Milei, have aligned closely with Washington, sharing skepticism of China's state-led model. Others, including Chile and Colombia, remain neutral, emphasizing sovereignty and open relations with both superpowers. China, through its Belt and Road Initiative, has deepened ties with Central American countries once firmly in the US orbit. For smaller economies, Chinese investment in infrastructure is a tempting path to modernization, creating a bloc of China-friendly states in America's backyard. This division brings both opportunity and risk. Nations can play rivals off each other for better deals, but risk backlash if they misstep. The challenge is to maximize benefits while safeguarding sovereignty, without becoming pawns in a global contest. The region's future depends on how well its leaders walk this diplomatic tightrope. The debate over global trade routes is a cacophony of powerful voices and clashing interests. The US, led by President Trump, has taken a hardline stance against Chinese influence in Panama, even hinting at military options and making aggressive diplomatic moves. China counters with accusations of US bullying, framing its investments as partnerships for development and threatening to use its economic leverage to protect its interests. Latin American leaders, caught in the crossfire, are striving to assert their own sovereignty and avoid being forced to choose sides. Panama's President Mulino has pushed back against US pressure, insisting on the canal's independence, while also making concessions to Washington. Other leaders, like Argentina's Milei, echo US concerns, but most prefer neutrality, seeking economic benefit from both powers. The region's consensus: avoid a zero-sum conflict and prioritize national development over superpower rivalry. The outcome will shape not just trade, but the political future of the Americas. The future of global shipping is at a crossroads, shaped by rivalry, climate change, and new technology. The rise of alternatives to the Panama Canal, China's mega canal, Mexico's rail corridor, Peru's megaport, signals the end of unchallenged dominance for the century-old waterway. We could see fierce competition, with rival routes backed by superpowers, fragmenting global trade and raising new risks. Or, a more diverse network could make supply chains more resilient, reducing the impact of disruptions. The stakes are high. Shipping costs affect everything from food to electronics, and geopolitical tensions could escalate into conflict. The decisions made now in Washington, Beijing, and across Latin America will shape the global economy for decades. Will we see a fractured, contentious world, or a more robust, competitive one? One thing is certain: the calm waters of global trade are growing ever more turbulent.